May go away, and typically people expect a lot of choppiness as we get to the summer. But like we've
Mhm.
seen this huge slew of like a curveball in sense where because of this sheer demand that we've seen,
Yeah.
especially with the ETFs, we've seen Ethereum really bounce back from the lows that it hit, I think, around in the April time. So it's been the story of the last few months, really. ETH finally got a bit of its rally. It's finally sort of back from being hated on for so much of the year. Like for most of last year, it was ETH was terrible. It's old. It's bad tech. It's too slow. Solana's so much better. And like now, is it going to put in the is it down only now for Sol ETH? It's going to be an interesting thing to carry on seeing in the market, I think.
Yeah, Ethereum is definitely having its moment. Anything else that stands out?
Yeah, I wanted to briefly touch on BNB because I feel like,
Your
BNB is
favorite.
always it's always sort of just forgotten about. And like, it's always been so strong. And I think
Mhm.
one of the big stories that you don't hear a lot of people talking about was actually BNB put in all-time highs recently. It hit all-time highs before ETH. And I think that's such an interesting thing to see in that is this sort of indicative of the Binance model? Are there huge amounts of trading volumes coming from the East again, which typically in CT, cryptosphere in general, it's very sort of skewed to the West. We look at
Mhm.
flows from the ETFs in America, but you don't often hear people having a conversation about, why BNB always just so strong. And like for me, it's always been a thing I try to keep an eye on, in all
But
honesty.
isn't it just the alpha program they were running?
Yeah, I think it could be, but I think as well there's so many different facets of BNB, right? They have their staking tiers to trade on Binance, they have the alpha program, they have the launch pads, they have regular burns. There's so many different modalities for the token to be burnt, sold, bought, whatever, that it's like this sort of constant drain on the token, and I think that's why you see such strength in it. Or is it because CZ owns most of the supply and he doesn't sell? I don't know.
Top holder. All right. Want to keep watching for sure.
Yeah. And we
Anything
don't have
else?
polyhedra this time. Normally we always have polyhedra on the heat map, and it's good to finally. I can't see polyhedra this time, and
Uh,
obviously we saw the outperformance from Litecoin as well, and that's always a bit of a worrisome one to see for people. I've often heard the concept of a Litecoin winter thrown around, that as you start to see periods of outperformance from Litecoin,
yeah.
sometimes it's like the start of a bit of a bad story. But again, I know there was another treasury company that's come out in favor of stacking, I think, like 100 million, 200 million of Litecoin. So again, maybe the Dino coins are having their day in the sun in this period that we're in, which it always happens, and you can't fade it. But yeah, I'd say that's my 2 cents overall on the market right now.
Okay, okay. Litecoin Treasury Company. Maybe that's a good segue. Should we continue to the DATs?
Yeah, let's get into it.
Let's have a look. Let's have a look. What? Because yeah, we talk about them every week, of course. So let's see what's the latest. What's the latest? Yeah, you wanted to talk about this one, Bitmine,
Ye-
largest ETH treasury in the world right now, and third largest overall crypto treasury stock. And they did that in record time, 35 days.
Yeah, Tom Lee, he's really gone for it. For years we've heard people stipulate if ETH will ever have its own Michael Saylor. And Tom Lee's thrown his hat in the ring. He's really going for it now. I mean, the speed in which they've grown, it's pretty incredible. And, you know, I never would have thought 4 years ago that so many different companies now would be copying the MicroStrategy playbook.
Yeah.
And it's crazy to see, as these companies start staking and involving this sort of yield that you have from ETH into these playbooks. I think it opens up a whole new dynamic because all people love yield, and like people search out for different forms of yield now, and it's a very simple thing, right? Oh, it's like Bitcoin, but you can earn 3% on it. You can't do that with Bitcoin. So and again, Tom Lee, he's out there on all the shows, on CNBC, on everything. He's pretty committed to it. I think the interesting point to note is that when Saylor first did his run into this DAT in the 2019 cycle,
Uh-huh.
he had to hold through the 2021 downtrend. I think it's a really interesting point to note is that whilst we're in a rising tide environment that lifts all ships, how, and I think it's the elephant in the room for everyone, is how these companies perform when the conditions aren't as stimulative, aren't as
Yep.
easy. And I think that really is the thing that, for me, keeps me up at night, for sure, because it's not necessarily a retail driven rally. It's huge companies, institutions, and like we spoke about on the show a couple of months ago, I've always been a big believer. It's quite reminiscent of the zombie companies in Japan. When the Japanese debt was incredibly cheap, many of these companies who were sort of stagnating a bit didn't have much about them. What was their play? To pick up cheap debt. Now you can't pick up debt as cheaply as you could before. People need to find a new paradigm to follow. And either for better or for worse, it seems that it's crypto now. It's brilliant now, but again, how it progresses, it's the $1 million question. I mean, I don't know, David, what's your thoughts on this sort of slew of treasury companies and that environment we're in now?
Yeah, definitely. I'm sure we could talk hours about that.
We could.
It's been such an interesting phenomenon. I fully agree with you, Darren. I do think Sailor is kind of on another level just because he entered in a very favorite point of the cycle. He also endured a big lag, a big drawdown, the 2022 winter, and all of that. He's also being very thoughtful. I mean, he is the probably one of the only companies that is mature enough to be able to explore the convertible debt market to leverage his balance sheet, so go beyond just like buying the assets on the spot market. And he's been doing it in a very considerate way, and I think what I would say is a pretty conservative, kind of using conservative financial leverage ratios. But the trend we've seen over the past 3 to 6 months is just mind blowing. I agree with you. I feel like um, I think we probably have the potential to have a handful of very meaningful treasury companies. I can totally see the case. And here we might have to separate the case for having a Bitcoin treasury company versus an alts kind of Ethereum or any other asset treasury company. I'm sure you guys talked about this already in the show, but you have much more opportunities to do, let's say, some sort of active management with these non-Bitcoin assets, or maybe even non-Bitcoin and ETH assets. Like you can buy locked tokens, you can do staking, restaking, manage airdrop. I mean, there's a lot you can do to enhance the returns that you would get just from buying an ETF. On Bitcoin, these opportunities are a little bit more limited, but on the other hand, it's such a big asset, such an established global macro asset that it allows for these kind of volatility. I'm going to call it volatility harvesting. Not sure if that's the right term, but this idea of kind of slicing and dicing Bitcoin's volatility and selling them to the adequate public that Saylor has been doing in a brilliant way. I'm sure most people here remember um, a lot of folks were bearish on MSTR when the Bitcoin spot ETFs launched. I mean, I wasn't watching it very closely, but a lot of folks, hey, what is this guy going to do now? And he absolutely brilliantly reinvented the purpose of MicroStrategy, and it's been great to see. But yeah, overall, I think it's going to be interesting to see how things shake out. I feel like a lot of these companies are just not going to be relevant players in the market. Maybe some of them will trade at a discount to NAV at some point. And I think here we're going to see a lot of differentiating factors as well. Like if you are a DAT of maybe a less established asset trading at a discount to NAV, it might be harder than for a company that is holding BTC or ETH, that you can just liquidate those things at the market without posing any price movements, which I think is the case for most companies here, maybe except for Sailor. There's also more consolidation opportunities, right? If you're in the BTC or maybe ETH space, right? If you're trading below NAV, there might be a company that is trading above NAV and is able to purchase you as a way to reduce their own multiple. So there's going to be a lot of interesting things playing out. I'm still not too concerned of a scenario of massive forced sale coming from these DATs. I feel like that's still kind of a little bit more of a distant concern. I mean, for those who are paying attention to what's to the Bitcoin or the ETH spot price, of course, a lot of these companies will not sustain the NAV multiples that they're trading at today, but that's a problem of the shareholders who bought those shares at that specific price. The thing I'm paying most attention to is whether we're going to have any forced selling of these assets, which, as you can see very well in the chart here, it's actually becoming quite relevant, even for large assets like BTC and ETH. So yeah, I think for now we're good. I would say we're probably on the seventh, maybe eighth inning of this process, of this initial process of seeing a lot of companies raising, but there's still a lot to come. We see some of that at FalconX. We participated in a number of these deals. So there's still more to come for sure, but I think we're definitely on the later innings of this kind of initial setup phase, if we can call it like that.
Very interesting. Okay, I definitely want to hear a little bit more about all the different services that you guys provide and your specific role as well in a bit. But before we do that, you briefly touched on it. We're seeing lots of interesting dynamics here with the DATs, but also the ETFs. They're sort of related, and there are a lot of interesting things going on there as well. Um, yeah, Darren, maybe you can give us a brief overview and enlighten us what has been happening the last week and month with
Yeah,
ETF.
absolutely. So I think the first really interesting thing that we should take our minds back to the initial launch of many of these ETFs, right? In the first couple of weeks of the Bitcoin ETF launch, we saw sustained, I don't want to say selling, but it was selling, particularly from the grayscale Bitcoin holders, because these were people who bought the grayscale Bitcoin product at a huge discount during the winter of 2021 to 2022. So when these ETFs first came, there was a huge amount of redemptions for that product. And I feel we saw a very similar thing with Ethereum. Now, we're so many months down the line, we finally, and a lot of people didn't think this would happen, we finally reached a point where we've carried on seeing the cumulative flows of the Bitcoin ETFs rise and rise and rise. And the Ethereum ones in comparison were relatively pitiful, to say it truthfully. But in the last month or so, we've actually seen a couple of weeks where the inflows for the Ethereum ETF actually have risen so high that before, right, ETH's recorded net inflows at its peak were only 50% as high as what the Bitcoin one were. Now what we've seen is that ETH inflows reach up to 90% of Bitcoin's flow. So obviously there's a lot of demand there. There's been a huge sense of demand out of nowhere. But then you might think out of nowhere, But then if you look at the backdrop of that, we're seeing all these positive news around tokenization. You're seeing people sort of finally waking up to the power of smart contract technology, which ultimately that's the huge thing in this case. And I think maybe it's just taken the institutional markets just a bit longer. It took people long enough to grasp what Bitcoin was. And now we're trying to say, oh, we've got this other coin too called Ethereum, and it does things. You can build apps, you can earn yield, DeFi, this and that. It was a lot of things when the average person had just got their head around Bitcoin. So to see this now, I think it's a huge thing in the market because you know no one. I remember at times there were days where there were no inflows for the Ethereum ETFs, and that was bringing around ideas. Is ETH finally finished? It's dead. No one cares about ETH. But to see this happen, I think it caught a lot of people off guard. I think because you find in crypto, people get so attached to these narratives, right? And these narratives work for a period of time. When ETH pumped, everyone thought the market was going to dump. And then once that becomes the consensus, right, that everyone believes that when ETH pumps, we're going to dump. Oh, ETH's getting no flows. Yeah, it's an easy short, easy money. As that becomes a consensus, at that point, in my view, it's time to fade. It's time to fade it. And I think it's all lined up perfectly with the summer, talks of the summer lull. It's choppy, sell in May, go away. ETH is done. And if you'd have followed all of that, you'd have lost money. Whereas actually, the inverse has happened. It seems ETH Bitcoin's put in a low. We've got all this positive news. And I think the ETF inflows tell the story of that. That's the new, I'm not going to say paradigm, but it's sort of like a meta shift slightly, in my view.
Interesting. CT is becoming like inverse Kramer. David, what's your take on everything that's happening with the ETFs and like how like ETH like the ETH ETFs sort of coming out of nowhere and yeah, the explosive growth we're seeing there.
Yeah, for sure. Well, first of all, the ETF market is very close to my heart. Before just as we can talk more about this later, but before joining FalconX, I was head of research at Bitwise, which is one of the leading ETF issuers. So I've been looking into this market for quite a few years, and it's absolutely amazing to see how well both ETFs have been doing. I feel like we sometimes have a very high bar for ETF launches just because we have like the Bitcoin ETF launch as this benchmark. But the Bitcoin ETF is by far the most successful ETF launch in
Ever.
history. Like
Yeah.
it's very hard to have such a high bar sometimes. But I fully agree with Darren. I mean, I guess the thing with the ETH ETF is that it probably launched in a non kind of ideal market time, right? If you remember well, when the spot ETH ETFs launched, the market was kind of trading sideways, and it's been trading sideways. It traded sideways for quite a few months after that. Obviously, ETH doesn't have a clean or easy to grasp narrative like Bitcoin does for the financial advisor public, right? Bitcoin is like digital gold, and folks have been banging the Bitcoin narrative for many years leading to the launch. Ethereum is kind of different. It's obviously very interesting, but it's kind of this smart contract platform, or maybe a little bit of a tech play. There's now obviously the tokenization stablecoin waves that I think are adding to it. So I think it's kind of natural for ETH ETF flows to lag a little bit, especially now that we have only single standalone ETFs, right? We don't have like a yet an easy way to invest in a broad crypto index like you can in stocks. Just buy an S&P 500 and get exposure to the whole thing. Today, if you want to invest in ETH, you actually have to buy an ETH specific ETF. Maybe you want to sell some of your Bitcoin position, maybe you want to bring new assets, but you have to be very targeted. So that adds a little bit of friction to Ethereum positioning too. This will probably reduce, by the way. This is going to change in a few months, and we can talk about that. But yeah, I fully agree. I think I'm actually I'm writing a note talking about this. We're probably publishing tonight how Ethereum has been massively underowned over the past year or so. I can give you some color from our desk. Obviously, Ethereum
Let's
has
do it.
been the top two crypto asset in terms of trading volume at our desk for a long time. And probably about a year ago, or maybe a little over a year ago, this has changed in favor of Solana. And I mean, to the point that we were seeing Solana trade more than ETH at our platform, which is a kind of institutional trading type of platform for quite a while. And then for shorter stints, you had assets like Hyperliquid and some of the like hotter assets. But Ethereum, which has traditionally been the top two asset in our platform, was quite low in the ranking, and this has sharply reversed over the past month or two. Ethereum has probably been sometimes the most traded asset in our platform. We're seeing 5-to-1 buy to sell ratios. So what I'm saying is this is overwhelmingly buy flow that we're seeing from institutions. And overall, I think my perception is that what we have seen so far for ETH is that we're seeing folks unwinding their underweights. I don't, at least on the institutional space, and maybe on the ETF and crypto space, there's other things going on. So as long as I think ETH is able to sustain this kind of positive sentiment and the narrative that is building, and we can talk about what's actually going on at the protocol and ecosystem level, but I feel like Ethereum has some like this rally could have some good legs between now and let's say the end of the year.
Very interesting. Yeah, we are going to get into that more for sure. Um, in fact, with the news out of the way, let's kick off the show properly. Um, yeah, we acquired enough audience by now for sure. With everyone here, I want to welcome everyone. So, welcome to a new Market Cap episode. Market Cap is where funds and firms provide their insight on their activities, sector, and the markets at large to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host and moderator, Stefano, Director, Institutional Services at Alea Research. With me, I have Darren, analyst and panel contributor, and we're joined by David Lawant, Head of Research at FalconX. David, we've already been chatting. Thank you for the insights. We're going to talk a lot more. Welcome to the show. Let's start off maybe with a brief high level introduction on FalconX, your main services, and the purpose of you guys.
Yeah, of course. Stefano and Darren, thank you so much for being here. This has been already such a good and fun chat. I'm looking forward to much more.
Yeah.
So I'm head of research at FalconX. FalconX is a crypto
Uh oh.
It-
Lost David at the key moment.
yeah, I guess
Let me
the
see if
market's
I
just.
can.
Oh, he's back.
Can you guys hear me?
Yeah, we lost you for a second, but we hear you again. Though there's no video. Yeah, you're back.
Okay, you good now? Okay, awesome. Maybe something with the um,
You were
my
just
webcam
about to
here.
tell us Falcon X. What do you
Yeah,
guys do?
so FalconX is one of the leading crypto institutional prime brokers and trading desks. And I fully understand that the term prime broker in crypto is very kind of elusive, kind of like not
Yeah.
everybody understands what it means. Honestly, there is an analog to traditional finance, but honestly, it's not also the same. But I think in general terms, that the way I like to describe
Oh boy.
Just as he gets to the good bit too.
We'll give it a few seconds. I'm gonna expect he'll be back. Yeah, he's back again.
can you guys hear
Let's.
me now?
Yeah,
Yeah, we hear you again. Um, the connection seems a bit choppy.
the internet just doesn't want us to know about FalconX. You know, to the viewers, this happens sometimes. You know, the internet, it comes against you. You can't fight it. You got to roll with it. It's maybe the market's just being so bullish that it's causing problems with servers, internet all over the world. Uh, what can you do when technology turns against you? It happens to all of us.
I'm sending him a message right now.
Yeah, it happens. There's not there's not a lot you can do to fight against when internet connection goes down. We can fill the gaps. We can talk a bit about the podcast whilst we're waiting for David to come back.
Well, I was saying, like, just as we got through all our news items, you know, nothing left in the tank. Although, actually, we had one in reserve. The MetaMask. Well, it's a rumor, right?
Mhm.
MetaMask might be launching a stablecoin. Surprise,
Yep.
surprise! When everyone seems to be launching a stablecoin these days. Um, Darren, what's the deal?
Well, it seems that they're going to be launching a stable coin issued by Stripe. But in
Mm,
reality, we want MetaMask to launch a token, right? We don't. No one cares anymore about MetaMask stablecoin. We want the MetaMask token. It's like they've ridden us for so long. MetaMask taking our fees, using swaps in their wallet, and what are they going to give us? A stablecoin, not the actual MetaMask token. So it's like, I think at this point, all hope people had for a MetaMask token, just forget about it.
that's out of the way. That's done.
Yeah. I mean, who knows? Whatever consensus has planned. But, we'll let bygones be bygones. We won't reminisce too much about the hopes and dreams that we had for the MetaMask token because, quite honestly, I think it's just too late now. Same with OpenSea. Most of these guys should have dropped a token 2 years ago, a year ago. But anyway, David's back now. We won't let me hate on protocols not dropping a token any longer. We're here to learn about FalconX.
That's awesome, guys. And sorry, I don't think it's my internet connection. But yeah, can you guys hear me well, or is it
The
still
audio
troubling?
is perfect. So yeah, let's just ride the
I'll
audio
just lock
wave.
my camera then. Can
Let's
you
do
guys
it
hear
like
me?
that.
Okay. Um, So yeah, I was talking about FalconX and how elusive and kind of sometimes fuzzy the prime brokerage kind of terminology is used in the industry. But the
Yeah.
way I think about prime brokerage is that for a number of reasons that we can discuss, it makes sense for most of institutional players to access a prime broker when they want to trade in the market instead of going directly to an exchange.
Hmm.
And basically we try to be a one-stop shop, and we're on the one of the leading players in being a one-stop shop for services that institutions use to access and trade the industry in a regulated and safe and efficient way. um, we do probably, I mean, prime brokers in general, they do a combination of maybe three main services. One is what we call liquidity provisioning. So like and this we do this for a very broad range of institutional clients. So you can think of ETF issuers, Bitcoin miners, protocol treasuries, crypto hedge funds, crypto VCs, retail aggregators. Let's say that, for example, if an ETF issuer needs to buy a large amount of BTC, let's say hundreds of millions of dollars, billion plus dollars, they're not going to just throw this order at an exchange. They will typically use a liquidity provider to do these things. So that's one of the big buckets, kind of a trading desk type of function, analog in TradFi. We trade across pretty much all markets, both spot and derivatives. We're especially strong on the derivatives side. I think we're probably one of the leading derivatives shop in the market, especially on the option side. I think we constitute a double-digit percentage of the crypto options trading volume.
Wow.
Um, and then the other thing we do is credit. We have one of the larger balance sheets in the industry. So for a number of reasons we can also discuss, sometimes clients will need credit to trade on our platform, sometimes to do off platform credit. We're one of the leading providers of credit for institutions here. The third bucket is custody and those types of services. We built a custody solution from scratch. We've been building this for I think about 3 years now. So these are probably the three main services. There's other ones like research, which is the part I run, capital introduction, and some of these other things. But you
Yeah.
can think of FalconX as this kind of one-stop shop that a lot of the institutions, whatever type of institution you're talking about, will use to access markets.
That's very insightful. That's very clear, and I think um, it's it's interesting because in crypto, I think for the retail audience in crypto, we're so used to having like interfacing very directly with exchanges and doing everything yourself. Like if you want to trade, you just execute the trades. And it's interesting this prime brokerage concept and service and yeah, service that's being provided to these institutions is can be to wider retail audiences a bit of a novel concept, but that's very clear and also makes clear why that's important to them, so that hedge funds and other institutions and firms can just focus on what they do best. You also alluded already a bit more to your research department. You're the head of research. It would be interesting to us to know a little bit more about your specific role and what research at a prime brokerage entails.
Yeah, 100%. So my job is actually just look at the market, try to come up with insights or context that helps our clients kind of more um, have more context and better navigate markets.
Mm,
Uh, Usually institutions go to trading desks for like a few themes, right? We tend to be experts in liquidity flows, what's going on with derivatives, how is the market positioning looking like, and all those things. Of course, I have a more fundamental background. That's what I used to do for most of my career. So I always try to bring a fundamental lens, like what's going on the Bitcoin protocol or Ethereum protocol or Solana. What are the most interesting applications? So that's the lens I always try to bring. But some of the topics that we focus the most on is what I would call like kind of trading dynamics. And this is, I think, interesting because we're in a very interesting seat because we see a lot of action. So we at FalconX move probably about $3 billion a day on a normal day. We're very active and we're probably the main player in some of the key markets. So of course we see a lot what's going on. We talk to a lot of people. We're connected to probably most, if not all, the institutions in the space. So of course we can develop kind of a high level market view on what the market positioning is looking like. Sometimes we share a little bit high level color from our desk flows just to show what we are seeing. So that's the type of primary stuff that people look for, kind of trading desk and prime brokerage research. But of course, we also spend a fair amount of time looking at the protocols, what's going on the ecosystem, because the ecosystems, because this is obviously super important for defining price action.
that makes sense. All right. Great. So, and maybe we can ask a little bit more about, okay, what are you currently seeing and what are you currently paying attention to when you're looking at these flows?
Yeah. I think to Darren's point, we're a little bit of in this kind of doldrums, kind of summer doldrums, and I feel like we might be in this vibe for a little longer. This is probably more pronounced in the institutional space than in the retail space. Um, Actually, I was looking at this list of the top performing tokens over the past 30 days, just among the larger names. Let's say market cap of above 10 billion, and of course there's one exception here, but the top five names are Stellar, HBAR, ETH, XRP, and Cardano. ETH is obviously the exception here. It has its own trading dynamics, but as most, I guess everyone here knows, is that these are tokens that tend to be very heavy on the retail side of things, right? And I
Mhm.
think it shows a little bit what's going on that side. The other way to look into it is how low volumes have been, spot volumes. That's one thing I mean, everybody who is on the like more like agency trading side of things look very closely. Bitcoin is now trading about $10 billion a day on the spot market, which is super low. This is, in my estimate, less than half of where it should be at this point of the cycle. Part of that means that some of this flow is moving to TradFi markets. That's actually just getting to your question, Stefano. That's one of the big themes I've been paying attention to, which is this increasing overlap between TradFi flows and crypto flows. Um, TradFi didn't used to be very relevant for crypto price formation just
Mhm.
because like proper crypto, centralized exchange crypto used to be just so much bigger than what we saw in TradFi. But these dynamics are kind of starting to change. I can give you a few numbers just to illustrate what's going on here, but if you look into how much spot Bitcoin ETFs traded as a percentage of the spot Bitcoin volume, this number used to be 10, 15%. Now it's like 40, 50 and growing. And that's only spot Bitcoin ETFs. If you add things like MicroStrategy or these other DATs, you're going to get to pretty much head to head levels with spot trading volumes. That's not even including Circle and Coinbase, like these crypto equities. I would put them in a separate category. But I think it highlights how, in terms of volume, we're pretty much now head to head in terms of how much Bitcoin trades in the spot market and how much Bitcoin trades in the traditional capital markets if you include spot ETFs and maybe some of the leading DATs. If we're not head to head, we're maybe 70% there. And if you actually, yeah, I don't want to go too deep into this, but in the options
No,
market,
please
this
do.
trend is even stronger. So that's one thing that I've been paying a lot of attention to. A lot of folks I know kind of caught blindsided in the rally that we saw post Liberation Day
Hmm.
when Bitcoin went down to, I think, around 80K, right? It absolutely recovered from 80K to 100 and 120. And I think up until we were from 80 to 100, a lot of us were puzzled because you have these very interesting and fairly well established liquidity trend marks that you can see when the rally is sustainable. So like usually volumes go up, usually the participation of US markets go up. You can see that in the Coinbase premium, or you can see that into how much of the trading is happening during US hours. So there's a number of ways to gauge like how sustainable a rally is, and we've had these very constant marks over the past couple of years that me and a lot of folks were using, and then and everybody was like, hey, none of these marks are here. US retail was not showing up as present, volumes were lower, not higher. Those were textbook hallmarks of a fake rally. But then, sometime through this process, me and obviously other market participants too realized, no, wait, the difference here is coming up from TradFi markets. If you add ETF flows, if you add MicroStrategy flows, you actually go back to where you were before. So yeah, it's been a very interesting process to understand this interaction between traditional capital markets and proper crypto. It's happening in many different dimensions, of course, not only trading dynamics, but yeah, it's been very interesting. The other thing I've been paying attention is obviously ETH. ETH has had a very interesting resurgence. We talked a little bit about it, and happy to
Yeah.
chat more as well.
Yeah, please, like, feel free to expand on ETH. Um, I was just wondering, so like, yeah, you're my takeaway is that okay, we're seeing a lot of net new capital flowing into crypto then effectively.
I think so. The difference is it's probably coming from different channels than the
Right.
ones we are used to seeing. The typical channel in previous cycles was somebody would Google what is Bitcoin, and then he would figure out an exchange, and he would wire money to an exchange, and he would buy Bitcoin there, and maybe from there go to other assets. The
Yep.
flow now is very different. Now, especially for the US retail market, which is where I think a lot of the money is coming from, not all of it, but a big chunk.
Hmm.
Now they just look on their Schwab accounts, they buy a Bitcoin spot ETF, and if they're interested, maybe they'll move to ETH at some point. But yeah, it's a very different kind of dynamic and wealth effect transmission mechanism. But yeah, definitely, I think there's definitely new capital coming to the market.
Interesting. You also you mentioned wanting to dive a little bit more in ETH. I think everyone is very curious about what's happening with ETH right now. So any any insights on that front would definitely be much appreciated. Uh,
Yeah, I mean, I started to pay more attention to ETH after ETH Denver. It's a US conference that takes place around mid February. I go every year. And for me, it's a very high signal event. And that's when it was very clear to me that things were changing in ETH. They were
mm,
changing at the ecosystem level, not very much at the protocol level. This takes time, but definitely all the changes on the Ethereum Foundation and all those things that right now are very clear. um, but I was talking to clients back then, and everybody was still kind of bearish and still kind of reticent to build a bullish position on ETH. I think the most impressive thing about this ETH underperformance cycle is just how deep it got, just like how low the ETH BTC ratio went, right? I don't think too many folks were expecting it to go that low.
yeah.
And a lot of folks were hurt in that process. A lot of folks, including me, were kind of calling for an ETH recovery at different points in that underperformance cycle, but it actually didn't happen very much. So I think everybody was kind of reticent to say, oh, now things are different. Now things are changing. But I think the main catalyst has been, again, this merge between TradFi and crypto. Ethereum obviously benefits from having TradFi spot ETF type of flows. Today, it's the only non-Bitcoin asset that has that. And there's all these kind of propelling narratives with the DATs and Tom Lee's and some others too, but also the stablecoin RWA kind of narrative. I think further in the future, we might see the DeFi Renaissance narrative gaining steam. This is 6 to 12 months down the road, is not for now, but I
Mm,
think ETH has a lot going for it. I'm part of the team that doesn't think that Ethereum is fundamentally flawed, and I totally understand that some folks believe that Ethereum is just done. I think the bullish view on Ethereum is that Ethereum obviously has issues. It probably took a wrong turn sometime over the past couple of years, but those things are solvable, and there's a lot being done to try to recoup that, and it also has this kind of narrative propellers. Um, the, the final thing I would say about Ethereum, and we happy to dig deeper, but just like a high level description of what's going on is we sometimes, I think, like to attribute too much importance to fundamental drivers. But honestly, sometimes you just have sentiment and narratives driving price. I actually look into sentiment indicators. I feel like they're a little bit of an underrated type of indicator. If you look at like Kaito Ethereum sentiment data, it's
Yeah.
actually not a bad predictor. I mean, it has a little bit of a leading impact. And if
Uh-huh.
you look into those things, I mean, of course, these relationships in finance are never constant and they're never very explanatory, but you can explain a good chunk, something between 20 to 30% of Ethereum's returns, they kind of can come from Twitter sentiment. But to your point and to Dara's point, this is obviously changing. Crypto Twitter is changing. These TradFi flows are becoming more important. So let's see how it goes from there. But at least for now, I like to use sentiment as a little bit of a leading indicator of where things are going. And so far, I think it's been going pretty well.
Well, that's an interesting point. Yeah, indeed. Like if you look at sentiment from Kaido, which is based on crypto Twitter, then if you think that Twitter is changing, which we definitely think it is from cycle to cycle,
Yeah.
then of course that has implications for what that sentiment indicator means. That's a very interesting point there. I was also curious about, because you mentioned you guys look at FalconX. You do a lot of option trading, double digits as far as the crypto options market is concerned. I was very curious, like what are you seeing on that front? And yeah, like I mean, it's interesting because options are in crypto a bit of like a little brother to perps, right? And how, like why are you guys so focused on options, and what unique insights are you deriving from that maybe you wouldn't get if you like look at perps?
Yeah, 100%. Options are a very unique instrument for you to express certain views about the market. There are certain
Mhm.
things that you can only do through options. There are things that you can do through perps, right? Of course, you can get leverage through perps, and that's great. And a lot of people do that. And you can also get leverage through options. But with options, you can express very precise views. So, for example, you can trade that you can bet that an asset will reach a certain price at a certain point. You can start trading volatility depending on how complex you go. So sometimes you're not even trading whether an asset will go up or down. You're just betting on whether that asset's volatility will move upwards or downwards. So, like, it can get very complex, but there's a number of things that you can only express through options. It's a relatively complex instrument, but honestly, I think they're fascinating. And perhaps more importantly for our conversation here, it's been gaining a lot of importance in the market. So I can give you a sense of, like, probably if you look at, maybe let's do Bitcoin only. If you look at Bitcoin only options open interest today, it probably hovers at something around 50 to 60 billion dollars. This number 2 years ago was like five. So we have gone through a massive increase in the importance of options markets. The other interesting thing about options, from here more from a researcher perspective, is that because you have all these unique instruments, so you're going to say, hey, someone is buying this call option at this price that expires at this date. You can extract a lot of information about what the market is doing
uh,
in a way that you just cannot for the spot market or even for futures.
yeah.
And also, you can see certain things that you are looking at a sleeve that I would call as a more sophisticated trader, perhaps, of part of the market. So it's
Yeah.
very interesting. Even if you don't trade options, I feel like just looking at what's going on the options market is interesting because it gives you this very unique perspective.
That is indeed fascinating, and I was gonna say that as well, or sort of like to that point is like you said, it's a more specific segment of trader, um, of market participant,
Yep.
and Yeah, like I'm also gonna guess, like with everything we discussed before, like that, the institutions are coming and it's net new capital, that this more precise instrument, as you call it, is gonna see uh, additional adoption now and additional growth compared to perps now. Um, that's very interesting. Darren, I thought you wanted to say something.
Yeah, yeah. And this is quite interesting as well. I was actually doing a bit of reading about this last night. And if you look at how large the options markets are within traditional finance, and you look at the ratio of open interest of S&P 500 options versus the market capitalization of the S&P 500, if you compare that to crypto, it's vastly different, as in much more volume of options are traded in relevance to the S&P than they are in Bitcoin. And now when you look at the rise of the ETFs, obviously in the last couple of weeks there was news that they're raising the certain leverage aspects of the IBIT options, meaning
Right.
that people can trade a lot more. Now, in that world, the options drive a lot of price action. A lot of hedging, even people getting rid of their hedges can have a huge effect in the market. And I think it's only just sort of the next progression is that as Bitcoin becomes more entrenched within the traditional finance system, it seems only logical that we start to see a rise in volume of options traded on these ETFs. And the interesting thing for me, and actually something I want to ask David, is that do you think as more and more options are traded through the different ETFs, does this serve to dampen volatility? Does it serve to amplify volatility? Because typically we've seen these huge sort of deleveraging events in crypto with the rise in institutional options trading. Could we in fact see people being able to hedge further down the line with much larger size than what we've seen in the past?
100%. That's a great question, Darren. What I would say is that in the long run, it should dampen volatility. It's kind of a, a, a an aftermath of the maturation process of this new asset class. So yes, I do think it helps to dampen volatility. But the thing is, this process is not linear and it's not constant. So there are certain things that um, honestly, I wouldn't be paying too much attention a couple of years ago that today I am. So, for example, when someone's buying a call option, right? So they're trying, let's use the most simple case. Someone is just trying to get leveraged exposure to Bitcoin. So let's say someone buys out of the money, maybe long call option on IBIT. Someone is selling that option to them. And more often than not, who is selling that option is a market maker. And that market maker needs to hedge their exposure somehow in the market. And typically, the way they do that is they're going to manage their Greeks, their alphas, their deltas, and like all those parameters. But one of the things that they will do is they will buy Bitcoin in the market in order to hedge that exposure that they acquired. So there are certain indicators like that try to estimate how much positioning, how is the positioning of these options market makers looking like, and how does it change depending on how the price moves, right? So sometimes you can see some of these moves getting kind of exacerbated by, for example, what we would call a gamma hedging from market makers.
Is it
So
GEX? Is that a big thing?
yeah, is that GVol or
Yeah, I've seen a few. There's a platform they share these heat maps with
yeah,
different price levels, and at certain levels, it means dealers are likely hedging, and at
yeah.
certain level, I think is that am I on the right lines there?
Yeah, 100%. That's totally it. This is we're probably talking about Amber Data. They're a great data provider. I actually use Amber Data. It's not like not sponsored or not anything. I don't know what the disclosures we need to make, but yeah, Ember is great. They have some really interesting options on analytics, and every once in a while they open some of that. But yeah, that's 100%. But this is just to show that the indicators that you look at, they're starting to change a little bit, right? Everybody pays attention to perps liquidations, right, as kind of a way to see what's going on in terms of forced selling in the market. Now maybe we have to start paying attention to what the options market makers are doing, right? It's just like a different, it adds a little bit more color and I think useful information to get good context on the market.
That's fascinating. Um, all right. Well, so it seems pretty clear from our conversation that, and like with the new entrants, these new institutions, that the the markets and participating in this market is going to get so much more sophisticated and complex. And this is just tip of the iceberg, it seems like. Before we wrap up, David, I want to ask you, what are you looking forward to? What are things on the horizon that you're excited about, maybe concerned about, or just keeping a close eye on, maybe because you think it might be indicative of where things might be going?
Yeah, 100%. So yeah, I mean, one theme that I think will remain with us is this bigger interaction between TradFi and crypto. I mean, we talked about that extensively,
Yeah.
and I think that is something that will continue. I'm very much paying attention to the DATs. I feel like one important topic here on the DATs that you guys know, but maybe just for the audience, is
Hmm.
that a lot of these announcements, they're in kind, so they don't necessarily translate into actual buying, right? So like a lot of these large numbers that we see there, they're usually, sometimes they're just one player transferring assets that they already have to a DAT. So it doesn't necessarily mean that there is buying, but to the extent that there is buying, I think over the next month or two, we might see a fair amount of unlocks, because depending on how these DATs are structured, and the ones that are structured as SPACs, you have to wait for the SEC to kind of do what they call the DSPAC. So there's a little bit of a waiting process before these companies can actually start buying crypto, whatever crypto they are using as underlying in the market. And I think over the next couple of months, we're going to see some unlocks going there, which can be positive and interesting for price action. Again, I want to make very clear that a lot of these flows are in kind, but the ones that are not, I don't think we have seen the entirety of them deployed in the market just yet. Um, the, just to throw two more topics there. First,
Please do.
macros. Yeah,
No,
can you
please
hear?
do. Go ahead.
Oh yeah, just to throw two more topics there. Macro is always important, but I feel like we're in a very important juncture of
Okay.
the market aggressively starting to price an easing interest rate cutting cycle. If you look in the what derivatives markets were pricing just a couple months ago, there were relatively mild chances of seeing, for example, a cut in the Fed September meeting. Those numbers have gone massively higher. I'm honestly more interested in seeing how the cycle will develop than this specific cut. But I feel that for risk assets, if everything stays constant, and there's a lot of moving parts here on the macro side, but if everything stays constant, this interest rate easing cycle could be very interesting for risk assets and crypto. And the final thing is DeFi. I mentioned very briefly. I think DeFi will go through some sort of renaissance with the increased regulatory clarity that we're seeing in the U.S. The
Mm.
SEC has already made some favorable statements, maybe hinting at a DeFi regulatory sandbox or something like that. Again, these are not things that will happen over the next few months, but I think if you think further down the road, maybe 6, 12, 18 months time frame, I think this could be some of the very interesting new unlocks that we might get in crypto.
Yeah, for sure. I mean, everything in DeFi seems especially like everything that's going on with vaults and curators. I'm spending a lot of time there lately. That whole space seems poised for something very, very big. Um, but I'm
Yeah.
just kind of like thinking out loud here right now. I was mainly curious, I think, to ask like, what do you specifically, I don't know, anticipate or hope for as far as DeFi goes?
Yeah, I think this I would be very interested in seeing how the regulatory environment kind of goes here,
Hmm.
and how DeFi shapes up. I think there's a chance that we might get to see some sort of permission DeFi. I know this is a term that was thrown around a lot in 2021 and maybe even earlier, but I feel like it will be interesting to see how this, let's say, new regulated or institutional DeFi, whatever you want to call it, I'm very
Hmm.
interested in seeing how it develops. I'm of the view that I don't think you need to go too crazy on DeFi. You can just look at the legacy DeFi 1.0 names, maybe the leading Solana DeFi names. I think you don't need to go too far in the market cap spectrum to find very interesting opportunities. I feel like those things still trade. I think none of them trades at more than a $10 billion fully diluted market cap. None of them. Most of them are below 5, 3, or even one. I just honestly, I've been just paying attention at the main names. The one exception here is that I'm very interested in on-chain interest rates trading as a new DeFi primitive. So things like Pendle. There's another one, another interesting protocol called Row, which I don't think has a listed token yet. But these protocols that are kind of creating the equivalent of interest rates markets or interest rates derivatives markets on chain. I feel like those this is a very interesting primitive that has been going for a few years, but I feel like I think it might be time for them to take off even more.
Interesting. Okay. Well, we'll have to stay tuned for that. It was definitely a very fascinating conversation with you, David. Very insightful. Um, yeah, I think it just shows how deep things can really go, and what's it kind of alludes to everything that's coming for our industry. I think the level of sophistication, as I mentioned earlier, the level of complexity almost when you have all of these instruments, like you mentioned, Pendle, options that allow you to express very specific views. Um, it's definitely a very exciting time to be in this industry.
Yeah.
David, I want to thank you for coming on and sharing these unique insights.
Thank you guys. This is great. Sorry for the technical difficulties here, not
Oh,
being on
that's fine.
camera. Yeah, we should do more of those. There's a lot to chat, and there's a lot. Um, there's always a lot to discuss here.
I think your camera just couldn't handle the idea of the DeFi Renaissance. I mean, you know, you're a man after my own heart,
So
David. Like, as a closing point, I think many of these DeFi protocols, like what they do and what they offer, brought a lot of people into the space 4 6 years ago. And I remember like the early days of DeFi. It was so fun and so innovative. The movement from pool to now projects like Pendle, and I'm rooting for the DeFi renaissance, and I really do think that there's so many facets of DeFi that people will use in their life, but they won't know that they're using. And I think that's one of the huge things that DeFi has to truly offer. And I'm just waiting for, as protocols like Aave continue to garner more TVL and eventually flip some of the biggest banks in the world. And I think it would be a beautiful sight to behold.
Awesome, guys. This was really, really great.
Absolutely. Thank you, David. Also, I want to thank everyone for tuning in. It's always a pleasure to have you with us. If you enjoyed this, you can access more insights in the following ways. For in depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel. All the links are in the bio. And of course, tune in next time. We're live every Thursday, 10 a.m. Eastern Time on X and YouTube. And I actually forgot, David, where can people find you and FalconX best?
Yeah, of course. So, well, you can go to falconx.io. We have an insights page there where we publish some of the things we do. I'm on
Nice.
Twitter. My handle is dlawant, DLAWANT. And yeah, you can find me there and FalconX as well on Twitter. And I'm looking forward to continue the conversation there.
Perfect. Thank you, David. This was
Thank you.
Market Cap, where funds and firms provide their insight on their activities, sector, and markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.
Peace.